Hi everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into a 10Q report, and let me tell you, this one's a real head scratcher. It's like trying to find a winning lottery ticket in a pile of overdue bills, so make sure you keep watching. The report paints a pretty bleak picture. We're talking minimal assets, no revenue, and a whole lot of red ink. But don't worry, we'll break down what it all means in plain English. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can join the discussion. This is AppSoft Technologies' quarterly report for the period ending March 31, 2025. It's basically a snapshot of how the company performed financially over those 3 months. AppSoft Technologies is the company we're looking at today. They describe themselves as a developer of innovative games, mobile apps, and esports platforms. Esports is competitive video gaming. The company has a news channel called Esports Reporter, and they also work with third-party developers through Gamify to create new games. Let's get right into the numbers. Looking at the balance sheet for cash, they had $76 as of March 31, 2025. That is not a lot of money. If we compare that to December 31, 2024, they had $101. So that means they are trending down. Their total current assets is also $76, the same as the cash. Total assets is also $76, the same as the cash. Total assets is also $76, the same as the cash. Total assets is also $76, the same as the cash. Total assets is also $76, the same as the cash. Total assets is also $76, the same as the cash. Scrolling down to liabilities, or what the company owes to others, the accounts payable and accruals is showing a big fat zero. That means they haven't paid some of their bills. If we compare it to December 31, 2024, it was $298. The accrued interest, which is the interest they owe on money borrowed from related parties, is $38,162. That's up from $35,895 at the end of last year. It keeps growing and is by far the biggest single number on the balance sheet. Note payable, the amount they still have to pay back is $46,143 compared to $442,542 at the end of last year. Your keeps growing $542 at the end of last year, and commitments and contingencies are things the company might have to pay or do in the future, depending on certain events. Here it says $0. Basically, they aren't committing to do anything. Moving on to stockholders' equity. The common stock is $449. Then there is additional paid in capital, which is $536,443 tolio in the accumulated deficit, or the total losses the company has racked up over time is dassen 1,041,114 So they have accumulated over $1 million in losses. Now let's look at the statement of operations, which will show profit and losses. Sales, or the revenue they've generated, has a big fat zero. If we compare that to last year, also $0, total revenue also $0, so they have no revenue. For expenses, they have selling, general, and administrative expenses, which are the costs of running the business, is $994. Interest expense is $2,267, and professional fees are $1,994. Do $590.45. and $590.45. In this brings the total expenses to $25,594. Since they didn't bring in any revenue, they're showing a net loss of $25,594. This is worse than last year, where the net loss was $14,086. Cash flow from operating activities, which is the cash generated or used by the company's core business, is negative $23,420. Cash flows from financing activities shows a note payable borrowings of $23,600. This is money they are borrowing, owner contribution $0. The stockholders' equity shows how much money the owners have in the company, and they had a beginning balance on January 1, 2025 of negative $475. The net loss was negative $25,584, bringing a balance of negative $5,444 for 2025. In the notes section, the company states it is a developer of innovative games, match-up apps, as well as esports gaming platforms, including Esports Reporter. The auditors are saying that there is substantial doubt that this company will be able to continue as a going concern for the next 12 months. Essentially, this means there's a good chance they won't be able to stay in business. They have a large accumulated deficit, meaning they've lost a lot of money over time and they're still burning cash. The net loss per common share is listed at negative $0.01. It means for every share outstanding, the company is losing a penny. The total amount of related party notes payable is $466,143. These notes bear interest at 2% per year. And on December 31, 2020, the company executed a drawdown promissory note in favor of Brian Glass Securities, Inc. Under this agreement, the company is entitled to borrow up to an aggregate of $150,200 to $400,000. As of March 31, 2002, to use of $400,000 to $1,000. As of March 31, the company in 2000 to draw $100,000 and $400,000 to the and Jin gat office indeed to borrow about 13 aggregate of $50,000 to $400,000 as of March 30, $400,000. As of March 31 in Tamping 20 and 21 calendar years. The drawdown note amount was increased from $150,000 to $400,000 of $400,000 of $14 from be $6,000 from this source. The company states there are no current legal proceedings against them. The company admits that their disclosure controls and procedures were not effective as of March 31, 2025 due to limited resources and personnel. Basically, they don't have enough people or money to properly oversee their financial reporting. So what's my take on AppSoft Technologies? Well, the numbers don't lie. They're burning cash, they have no revenue, and their liabilities are piling up. The company is clearly in a tough spot. The fact that they have admitted that they have ineffective disclosure controls raises some red flags. It basically means they don't have enough people or money to properly oversee their financial reporting. This is not something you want to see from a company. That said, they do have some assets. They have some esports platforms and know how to create games, and the company does have some funding. They can still borrow $136,000 or so on the drawdown. Overall, the direction of the company is questionable, and they're facing some serious risks. The main opportunity for AppSoft is the ability to successfully launch a game. But right now, AppSoft Technologies looks like a very risky investment. Alright, that's our breakdown of AppSoft Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.